Well, as markets flirt with record highs and we head into the second week of AGM season, what can we expect from the major market players amid the current economic backdrop? Kyle Boulden is Senior Wealth Advisor at Canaccord Genuity. He joins us now. Kyle, good to catch up with you again. Thanks for joining us. What would your observations be then, given it's not just here, but the US, the globally markets at record highs, that momentum, it's pretty hard to fight at the moment. How would you view those valuations though?
Hi, Andrew. Yeah, great to be here and thanks for having me back. You're exactly right. A lot on as usual, not in the way of data prints too much strictly speaking this week, but of course we've got US Q3 earnings right underway and second week of AGM. Now, you're right on the momentum index. Now, that's been up about 63% year rolling in the S&P 500, where the S&P itself is up 35. So the momentum is definitely taking charge at the moment. We're sort of thinking domestically here from the AGM season. It will be much of the same with regard to having that same conservative guidance from the August reporting season that we expect to be reiterated. We saw Nick Scali today, Stockland and Worley's. Nick Scali was obviously down around about a little over 5%. The other two broadly up, of course, in line with the market as well. But the main call-outs really across the AGM season from Macquarie, potential positive surprises, those being JB Hi-Fi, Downer and Charter Hall, much in the way of citing a resilient consumer for JB Hi-Fi and also incorporating that AI train that we seemingly can't get away from.
Yeah.
So,
How do you rationalise that? Particularly, you mentioned JB Hi-Fi. It has done very well. Perhaps, well, despite forecasts there of given the cost of living pressures, but and maybe that has been reflected by what we've seen with Nick Scali. Yet, how do you view the difference there of some of the retailers locally?
Yeah, you're exactly right. I mean, it depends a lot on how well they're really incorporating that digital and tech factor as well, right? As in the online retailers seem to be doing particularly well. You know, JB Hi-Fi really shooting the lights out recently. I mean, you've seen over in the US that AI train is really unstoppable at the moment. So a lot of the time, what we've been seeing in earnings and AGMs is that citing of AI from CEOs, which is around about 60% of some of those companies that are reporting. So I really think it comes down to the bricks and mortar faction of the market versus online. And yeah, we do have a very strong consumer. However, it does seem to be dwindling a little bit. So with respect to your first point that you made on valuations, sure, it's a little bit scary, but we should have some of that conservative guidance still coming through, and I think that rhetoric will stay mainly unchanged.
All right. Okay. So there are potential positive surprises. Actually, might just get your view on Charter Hall. How are you viewing the REITs at the moment, given the pressure they've been under, obviously, in the last couple of years? Yeah,
for sure. Look, the REITs definitely have their own troubles at the moment in the commercial space. You look anecdotally down at Melbourne, and it doesn't really look that good, especially for that B and C level commercial property. With regard to Charter Hall specifically, you've seen a significant run up from those levels down at $9 or under $10, and it's obviously come all the way back up to that $16 level as it trades now. We're looking for a positive update on funds under management, really, because Charter Hall's really gone down that route of being a fund manager in and of itself, rather than a balance sheet player. So that would be the key thing to look out for. Funds under management, which is looking to uptick. But again, after a 60-70% rally from those bottom numbers, naturally there's a question to be asked there. However, if you look back at the pre-COVID levels where it was trading, then we've got a long way to go.
All right. So, as mentioned there, potential surprises there. What about the negatives, though? We don't like surprises in that sense, but which stocks are potentially featuring there?
Yeah, Domino's stood out in line with the street optimism that was given in the early FY25 trading. Of course, that has had a catastrophic fall back down to reality. So, we're always conscious of price when we mention all of these stocks, because everything does have a price at the end of the day. So we need to, whether that's actually been washed through the name is yet to be seen. On the other two specifically, which have their AGMs, Domino's has their AGM on November 6th, and these other two have both of theirs on November 7th, are traditional media, Nine Entertainment and Seven West Media. Both just with negative TV updates, really, whereas that traditional media sort of phases out to things like ausbiz.
Yeah, well, streaming's the way to go, isn't it? That is certainly the future. But as a result, and those falling revenues we're seeing, simply because you look at, particularly the broadcasters there, the eyeballs just aren't there anymore, are they? Or even, in terms of audio at the same time. So, is it such a negative outlook then for those companies?
I think so. It's quite structural, isn't it? This is more anecdotally than anything, but case in point as to the way that we really that we consume our media these days has really moved away from those traditional outlets. You only need to look at overseas. I guess you may have heard, especially your audience may have heard, we've shifted a lot of the political polling away from traditional media outlets all the way to Polymarket, which that was a crypto outlet initially. So yeah, it's really moved away, and it's very much dynamic in the way that all of these news outlets are pushing media through to consumers.
Now, Kyle, let's touch on commodities, because the commodity in focus right now is gold, taking a new record significantly, 2,700 US. It continues to march higher. How are you viewing that? Do you think that's sustainable?
Yeah, we've had a very positive view on gold for quite a while. As you mentioned, it's pushed above that 2,700 level over the weekend. Now, the precious metals market, of course, again off the back of financial uncertainty, we've seen silver, copper, very large boost recently as well, up to the $33 level. But specifically on gold, we've got those names. We've got all of those names, such as Mexico, Mongolia, Czech Republic, all saying they'll buy more gold and add to their reserves. That was only a week ago that they mentioned at a conference that they were looking to purchase more of the precious metal. Now we've seen Russia's total gold reserves up to 31.5% of their reserves as a central bank. So look, it's definitely, again, a structural play there. Sure, there's a question about whether that does look overextended on technicals, but it's for sure seems to be something that's very much structurally based behind central bank buying. On the, with that oil pullback that we saw, now we're seeing gold trading at 39 barrels of oil per ounce, which is, traditionally quite high. So the question I don't think is with regard to how much structural demand there is from an industrial point of view, but from a central bank and a hedging or a dollar reserve currency point of view.